the product is called CareShield. When we saw this from Minnesota Life, we thought, wow, what a catchy name for the right product at the right time, and that's what we're going to be talking about today. So as we go, when we start this, we kind of like to make sure everyone knows that AIM and Golden Care have been working together since the early days. Back, I guess, the early 80s, we got together, and actually my father and Lenny Anderson did a handshake and have worked together, and we've covered the country with the two organizations ever since with the various products. And here's another one that we identified through Minnesota Life that we thought this could answer a lot of things. And just as you can see the map on there, the territories that AIM works in, and also the territory that Golden Care in. And our experience in doing this type of products, as you can see on the screen, is very extensive. Challenges, as it was mentioned before in the start of this thing, is of course we've all heard and heard complaints about rate increases, pay for more for less coverage. It's been rather frustrating. Rate increases on old blocks of business, we see them, and we'll continue to see them because I've heard of a few recently. So it's a frustrating part of the LTC world that we live in today. And although we feel that that's a very important world, and we're definitely all in it, there are some frustrations with it. Use it or lose it product, that's what it's always been known about. You know, I bet you all have had clients out there that have said, well, what if I don't use it? It is a concern out there for a lot of customers when they're looking at purchasing long-term care or implementing a plan for their future. They worry about these things. Too many choices and riders. That is another issue that we've had in the past, that it gets too complicated with long-term care. And I think that this product here is going to clear that up. Well, I don't think it. I know it will do that. CE requirements. You know, the group that we're talking to today, we don't really have to be concerned about CE requirements because we're full-fledged into the long-term care market. But out there's a lot of people that either given up on the long-term care market or have not even attempted to go into the long-term care market because you have to get additional CEs and extra requirements. It's just not worth their time. So don't have to have that LTC credits to sell this product. Underwriting, I don't want to give anyone the idea that this is any easier than long-term care, although there is a option there with underwriting that we will talk down the presentation that I do need to make you aware of, that something may be possible where we can't in the LTC world. But please don't think that this is the option, hey, now we can get things issued that we've never been able to get issued in the LTC world. Results, because of these things happening out there, you've got fewer companies, and gosh, you know, as Mike mentioned earlier in this thing, is we've heard of one just recently, a biggie that's leaving. We've had several other ones, and fewer agents, of course. You know, sometimes that's good, sometimes that's bad. Fewer agents, less competition. But I really do believe competition breeds more business. So we want as many people in this business going at it because it actually breeds more business. Eroding customer confidence, you know, with rate increases, they hear all this bad publicity going on out there. We see some of that going on. And, of course, less sales. I mean, back in the late 80s, early 90s, and even the early 2000s, we were selling a lot more long-term care than we are today, currently. But it is still a very important market. So with that being said, those are the challenges that we run into. Then this marketplace came out, as we've talked about, and that Mike Lynch hit on, is these combination life and annuity products. And those sales have increased over time. And just so that you guys know, we do market those types of products. And we've had them for some time, but we have not been able to really move the button on those products. And some of the reasons is they're complicated. A lot of them can be a lot more complicated, and makes it difficult to grasp and get your hands around it, and for the clients too. Also, there's a limited marketplace for it when most of those are in single premium type products, where not everyone's got 50,000, 100,000, 200,000 lying around to transfer into a type of product, or not even willing to do that. So it has been a challenge to get this marketplace. It has grown since its emergence into the deal, but it hasn't taken off like everyone thought it will be. I will tell you that it is. You're seeing more carriers go this route, but it is a difficult route to start with. That's why we're going into a product that is going to address this. This screen really sums it up really, really well. This product that you're going to hear about and see today is really the epiphany of easy. Your clients are going to be able to understand it. You'll get it. Everyone that deals with this product, it is not a complicated product, and you will find that it's something that you can demonstrate in a very short period of time, 10 minutes, and everyone understands and can see the value in the product. So we're getting into the product as we go, but let's talk about the carrier that this product is with, and that is Minnesota Life. Minnesota Life, as you can see on the screen now, the ratings are as strong as they come. You can see the Comdex, and we really, over the years of selling a lot of long-term care, have noted that Comdex is really the figure that you want to pay attention to, because the fact is it takes all of the rating carriers and put it together to get a rating Comdex number, which means that they're not just looking at AM Best, not just looking at Fitch or Standard & Poor's or any one of those rating carriers. They're taking all of them and putting it together and signing a Comdex number. You're in the 90s in a Comdex number, that means that you are up in the top echelons of companies. And in today's market, that's a big thing. With financial, you've got a Minnesota Life that's been in business for years and years and years, and you've got a good, strong company stable behind you. Tom?
Really, Dave, that's one of the things I want to add in. This is Tom again, that having a strong company is really important, because what we're going to talk about as we get into this simple product today is, you'll hear us say it a lot, simple and guaranteed. And that's really the beauty of the CareShield product again, and having that strong company behind us really helps with Minnesota Life and Securian. So I'm going to jump in, and Dave, feel free to jump in at any time if you want to add anything. But real quickly, you guys, this product, you'll hear me say it, live, die, or quit. It's guaranteed. It does its job, and that's the beauty of it. It pays if you need chronic care. We're all in the trenches with long-term care. We know how important it is to have that protection as people are growing older in America and living longer but sicker. This product's going to be there for them. And basically, it's as simple as starting out. If you come at it from the care side, you choose a monthly benefit of $2,000 to $10,000. And then that product is going to pay for 25 months. So it basically pays 4% of what the death benefit is, and we'll talk about that in the next screen. But that's really how simple it is. It pays for 25 months. And when I say 4% of the death benefit, I'm going to show you in a few minutes how you could decide to take less than 4%. You can stretch it farther than 25 months. So it's a very flexible product at claim time, and it does its job. And one of the things that we really like about this product is the fact that it's literally a cash product. You don't have to worry about care receipts. You don't have to actually worry about what types of care or care definitions, etc. This product can literally pay benefits that you can use for absolutely any purpose you want at claim time. And when we talk about claim time already, we know that this is a pure, just like long-term care, same claim triggers we're used to there. So it's no surprises there or worry about permanency, etc. Now, if we go to the next slide, tell you what, it pays if you need the chronic care, but it also pays if you don't need the chronic care, right? This is the if you use it or lose it scenario. You don't have to worry about it with CareShield, because this product has guaranteed benefits on the face amount as well for your death benefit. So whether you use some of your benefits up and then you die, or you don't use any benefits, it's there for you at death, and it'll pay your face amount. Face amounts can be $50,000. That's a nice low amount. We'll talk about that later on. Gives you some flexibility to stack this policy, etc., all the way up to $500,000. And again, 4% of that face amount can be used for the death benefit, or for the chronic illness benefit, excuse me. We also have a terminal illness benefit built into this plan. Minnesota Life put in the terminal illness saying if you have a life expectancy of less than 12 months, you can get your death benefit right away. They hold back $10,000 of it until you actually die, but you can get the full amount. So if I had a $200,000 policy and I had a terminal illness that was less than 12 months of life expectancy, it would pay $190,000 right away, so I can use that money however my family needs to, and then it would pay the additional 10 at death. So very simple, very guaranteed. Also, it has an escape clause, which we love, right? Built-in money-back option. This is built into the plan, and for any reason you want to discontinue your coverage, you can get some or all of your premiums paid in, returned to you. At 15th year, it's 50% of all the premiums. 20th year, it's 75% of all premiums. 25th year, 100% of all premiums. You know what we like about this is, tell you what, it's the death benefit obviously is your return of premium upon death, plus the extra face amounts, etc. What we like about this is there are more and more people, especially with the way our economic situation has been lately, whose investments haven't done as well as they wanted to, right? This is a perfect opportunity for some of those folks to know they have a safety net. If, God forbid, something happens where all of a sudden they're getting older. My mom's a good example. She's sitting out there at 89 years old, and she's saying, boy, you know, my investments weren't quite what I wanted them to be. If she was in a situation where she absolutely needed to get that money, tell you what, that 25th year is really strong. 100% of the premiums back, and it gives you that safety net if you needed to get some money back while you're still walking around. Okay, so remember that has that built-in safety net. Live, die, or quit, this policy pays.
And Tom, just a quick note. Excuse me. As producers and agents out there, how many times have you had a client say to you, "Well, what if I don't use it?" Well, this is a sales tool, part of the product. This is going to give that people peace of mind that what if something changes down the line that they need money or just don't feel they're going to use it, that type of thing. It is something that I do believe that a lot of people probably won't want to use, because the fact is that as they get older, they see the value of this protection. But there is, at the time of sale, the thought is, what if I don't use this product? Do I lose the money? And we take that away from them. So as a tool for all of you out there, this is a very strong point that you want to spend the time that they cannot lose on this product.
Absolutely. Thanks, Dave. And the nicest part about this whole plan, in my mind, the reason that I really gravitated towards it, was not only the simplicity, but the guarantees. And we all know, if you've been in the trenches like I have, and I know most of you on this call certainly have, we know the fun of having those few clients. We know the power of long-term care insurance, but we also know the fun of getting those letters in the mail saying we're going to get a rate increase, etc. When people nowadays on the internet are hearing about that, and some people do have a bad taste in their mouth, you got to get over that objection that we hear so often. I'll tell you what, this thing is literally guaranteed. Not only the benefits guaranteed, but those premiums are absolutely positively guaranteed to never increase no matter what until the life of the client. So they know when they get involved in a plan like this that they can have that peace of mind when they put their head on the pillow at night. That policy is going to be there, and they're not going to get any surprises down the line.
And one last thing is with long-term care, we all consider it like health insurance, and everyone's pretty familiar with health insurance, that there's going to be rate increases on long-term care. I do believe in the very near future they're going to settle down somewhat and be less and less of rate increases, and not so extreme. But in today's market, I just saw earlier this week another carrier out of Texas going to have somewhere around 80% rate increases. How can you go into a client and say simply this: I can guarantee that your premium will never, ever go up as long as you have this product. It will never, ever go up. That puts you in a very unique position that most agents out there can't say because of the history of long-term care. And now we've got a position for you to go in and say that I can give you something that can protect you and never have to worry about that premium going up.
Absolutely. Tell you what, as a summary, what makes CareShield different, real quickly, this is a powerful slide because this product really is different. And not only is it a continuous pay plan where you can pay monthly or annually, whatever you want, for a continuous amount of time, unlike a lot of the plans out there that were single pay or just limited pay, where it really narrowed our audience, didn't it? This is a continuous pay with those rate guarantees we just talked about. So that part of it spreads the net wider. The chronic illness benefits, again, we already talked about the fact this is a pure cash benefit, so you don't have to worry. Once you hit that trigger and the policy starts paying, it doesn't matter even if you're not getting the care, doesn't matter about care definitions, doesn't matter, etc. This thing's going to pay you that monthly benefit, and it's going to be there for you as long as you need it. Condition doesn't have to be permanent. Remember, that's a big one. We talked a little bit about, Mike did in his intro about the 101G and 7702B. All you have to remember is this thing no longer requires permanence for the chronic illness. This is a benefit. Literally, the triggers are just like we're used to with long-term care insurance. You need 2 of 6 ADLs, or you have the cognitive impairment. So you don't have to worry about any surprises on that end. Also, no back-end adjustments based on life expectancy. This is one of the areas that, another reason I really love this when it comes onto the simplicity side of this plan. There's a lot of policies out there that some of you probably are familiar with them, where you're trying to explain it to the client, and then they're saying, now wait a minute, if something happens to me and I have a chronic illness, now how much does it pay? And I promise you, there's a lot of agents out there, because I've talked to them on the phone, they don't even understand the formula to figure out what it would actually be, because it's based on not only morbidity, but mortality and how long they're going to live and life expectancy. And Mark Randall, when he trains this product, my brother, he talks about the fact that he knows of one of the plans out there for a 55-year-old that if you had a $100,000 policy, it would pay $54,000 if somebody had chronic illnesses. So they do have these formulas that can be very confusing for clients. Again, with CareShield, you don't have to worry about it. With this, total flexibility, it pays up to 4%, and the reason I say up to is not a limitation, it's more flexibility. If you don't want to take the full 4% for some reason, you want to stretch the plan and have it pay for more months, more power to you. This plan is there for you and can make it very, very easy at claim time, and at, more importantly, the time when you're making a decision to buy. Very easy to explain to your clients. Dave already talked a little bit about the fact that there's no long-term care special CE needed for this type of product, because this is a life product, so you don't have to worry about having that. And we all know it's kind of nice to have the triggers of long-term care without having to worry about the other side as well.
So here we got on the screen now is really actually a snapshot out of the brochure. And the reason we brought this up for you guys to see is simply that to show you the layout is so simple for a client. When you're sitting down and presenting this to a client, this is what you're going to be able to sit down with them and talk about. And really, there's a couple of components, but really there's really 3 main components. There's the death component, the chronic illness component, and the terminal illness that's tied in with it, and then the return of premium. This is what we've been talking about as we started this presentation, and throughout the presentation we will continue to talk about, is that it's not a bunch of other little messiness in it. It's really straightforward, 3 components. If you die, if you need living benefits, or if you want to get your money back, you can. And that's really as complicated as it gets. And it has been laid out very straightforward for the clients to see. And you know that I'm sure as a producer doing a lot of sales, you've sat across the kitchen table or a desk or some form or another and got that glossy-eyed stare from the client saying, what the heck is he talking about? I don't understand. I don't follow him. You know what? That's all going to be gone after using this product, because it's really that straightforward, that simple, and people won't have the glossy-eyed stare anymore. They'll be able to understand and evaluate this product very easy. Tom?
Sorry about that. I had myself on mute. Basically, this plan, this is a little chart, and the thing you just saw from Dave is actually in the illustration. It's in the brochure. That's one of the cool things about this plan. Goes back to the simplicity of it. Is if you guys are familiar, and some of you probably are on this phone call, you get into some of those life plans out there, and they have 35, 40, 45 pages in the illustration with all these different assumed values, accumulated values, all the different jargon in the industry. And with this plan, again, very, very simple. You just walk in, just show that little chart that Dave just showed. It's an elevator speech, right? Talk about the fact that chronic illness benefit amounts, there's a little chart even to show you. If I sell you a little nice baby plan, $50,000, good face amount, it'll pay up to $2,000 per month at claim time. And again, up to is total flexible. It's not a limitation. It can pay the $2,000 per month. All the way down, you can see it break, and I won't read them all to you, but if I sell somebody a $125,000 plan, it would pay a solid $5,000 a month. $200,000 would pay $8,000. It pays all the way up to what the IRS per diem limits are, and we know that those go up, so you don't have to worry about being limited forever. But as of today, those are sitting at $10,200 maximum. So they're just doing that to keep tax things in line. So basically, most of us are going to be selling. I think we're going to see a lot of the smaller policies with this plan. If you do get somebody that you're talking to and they want $1 million life policy or $2 million life policy, tell you what, one of the things we like about Minnesota Life and Securian is they got a lot of nice products. They've got the Eclipse Protector, for example, that I think we'll see some of those sales come over for people who want a bigger dollar amount, et cetera. So that being said, I don't know, Dave, if you want to add anything on that right now, or...
No, again, I'm just going to emphasize on the straightforwardness of this. Is it's 4% of whatever the death benefit is, and it makes it real easy for you to show the client on what they're going to get for a benefit. It's not, well, what do I get if I go on claim? It's pretty straightforward, and it's cash, and that's so important in today's world. Now I want to take a little bit of time, not too much, but I do want to give you guys some sales ideas, or at least a positioning idea. Yeah, this product is such a great product, but where does it really fit in the marketplace? Well, one of the things that we're very familiar with in the long-term care world is the change that we have seen in gender-based rates, which has really hit hard for women out there. I mean, you can see double the rate or even sometimes more than that on certain situations where the rates get really tough for women on that. Well, guess what? In life insurance, life expectancy is better for women, so the rates show up even stronger for women under this type of product. So with that being said, now the area of women rates, you should be looking at this product with the single female market, because the rate on this is really going to look strong. It's going to look strong in every aspect that you look at it. But I want to make sure that you understand that life insurance is where this is driven off of quite a bit. So as they get older, so do those premiums because of the mortality tables. So we really do feel that this market, it plays, and this product plays in the market of anywhere from 45 to 65. You will find a place where you can work with it very easily. I'm not saying you can't go above that, and I'm not saying you certainly can go below that. Absolutely. In fact, I actually like to use 40 to 65. But just trying to give you guys some guidance on where that marketplace is. If you're in the 70s, you're going to see some real big premiums with that deal. And even if you do see a bigger premium with this product has more to it than just the traditional long-term care, because you've got the life component and you've got the money back component to it. So keep that in mind. And just to give you an idea of the premiums, we did an illustration of a 59-year-old preferred non-tobacco smoker. You've got $125,000 face amount. You got $5,000 monthly benefit. That's 4% of that 125. The annual premium's $27.87. You've got a long-term care quote here at $125 max benefit, $5,000 monthly benefit. With 3% compound inflation, you've got $25.08. Now, No inflation, the negative on the CareShield product. Okay, understand that. We totally get that, but we have other things that we think that will play into it. Let's look on the other side of it with the long-term care. Will rates go up? So that premium's a little lower today. Who knows what it'll be in the future? And I can guarantee you, as I'm talking to you today, that premiums are going to go up because this is like a health product, as I said earlier. I don't know how much. I don't think they're going to go crazy, but it will go up over time. We're not going to see that with CareShield. Use it or lose it. That's the way long-term care. If you don't use it, you're going to lose what you put into it. With no ROP option on it, and you can put an ROP option on a long-term care policy, but as we all know what that does to the premium, it explodes the premium, so it just doesn't make sense. And with the product that we're currently selling with Mutual of Omaha, we think it's a great product, but it is only 40% cash, where the product that with the CareShield, all 5,000 would be a cash option. So how good would that be when you're sitting down with the client to say, look, you can take this $5,000 and do whatever you want with it, and you can have it all. With the mutual products, only 40% of the $5,000 is what they're going to be able to use with cash.
Dave, if I can just jump in there, go back to that previous slide if you don't mind.
Yeah.
One of the things to make sure you remember too is one of the huge differences is, remember CareShield, it's a life product too, right? So now I can look at that client and say, you know, never forget, if God forbid something happens to you 5 years from now, boy, that product on the left, tell you what, $125,000 face amount is going to be able to pay out. That's a huge difference. We know in America today, as much as anybody who's in the market, especially with us in the insurance market, we know most people are underinsured on the life insurance side. So that's why when Dave said, I like the rates at 40-year-olds even, this is a huge market. It opens up a lot more doors than what some of us even are used to, because of the fact that they know long-term care is out there. You can educate them on the overall need, but we also know everybody needs life insurance. So we can add on to their existing life insurance with one of these plans, and it is a big plus. I know for a guy like me, I look at it saying, you know what happens if I pass away? I don't think I'm going to be the guy sitting in the nursing home till I'm 90, but I do know there's always that threat of something happening, whether it's an accident or illness early on. So don't forget that part of this too, given that huge face amount there in the early years. Go ahead, Dave.
And another example of a 51-year-old female, preferred non-smoker, at $200,000 face amount and $8,000 monthly benefit. Some of you want to get up more of a monthly benefit. We did the same thing, and look at the premiums. They're right at there. Same scenario with the no inflation, but you still have all the other scenarios on there. And I'm going to tell you that this is in the agent's mind more than it is the client's mind on this. What you think that they should have and what they think they should have are totally different in most cases, okay? We all believe that inflation is very, very important, and we know it is important. I'm not saying it's not important at all, but we make it this big thing out there because we know the costs are going up. But to the client, that may not be as big as we have made it. What to the client will be is, hey, is this premium going to go up? That's more important because I'm buying it today. What if I can't afford it tomorrow? What if I never use it? Can I get my money back? To the client, those are the things that are really going to be important to them, because of the fact that a lot of people don't want to use this insurance. They're not more concerned about whether the inflation goes up. It's whether if they don't use it, or will they have to let it go because the premium's going up. That's what the clients are concerned about. Is your client risk averse to intolerance? So basically, our job is to find out and make the appropriate product recommendation. I said earlier, and I think we all are on the same page on this, long-term care is very, very important today. This product won't be for everybody that we show it to or run up against, but this product is going to be for a lot of people that haven't moved into the long-term care world, as far as saying I haven't looked into it, it's not something I want to look into, this could be for those people. It could be for a lot of people that tried to get into the long-term care world and just couldn't afford to, and could do different options. One of the things I didn't do that I should have done earlier is when I said the area that we think that most of these sales are going to be in, I said the age parameter, where I think we really will see most of the sales, and I think Tom hit on this a little bit, is the 50,000 to 150,000. I think that's where we're going to see it. Over the years of selling long-term care, we have uncovered that there's a risk tolerance with the majority of people, not all the people. There are some people that can afford big, huge premiums and will do so. But over the average of sales, we see there's a risk tolerance, and it sits somewhere around 25 to 2,000, somewhere in that range, a little higher, a little lower. If you can stay in that, you see more sales. If you get out of those ranges and you're going up higher, you see less and less sales. So there's a risk tolerance there that we see, and that's where we see most of the sales are going to be. And what we're going to go into is really now just some of the a summary of this, so we understand that what this product really is about. As Tom has done a very good job on, is rate guarantee premiums. You can never increase. The guaranteed benefits, the face amounts from 50,000 to 500,000. It covers the chronic illness, terminal illness benefit, with that 4% coming out straight off of the death benefit for a total of 25 months. And Tom, this is where I think that you were going to talk about that area about maybe not using the full 4%.
Yeah, basically this is just one of those, if you get somebody who really wants the flexibility, they're looking at it saying, you know what, if something happens, I want to have a little bit bigger monthly benefit, but remember the flexibility this product allows you not to worry about that. So if I have, for example, if I buy a big solid $200,000 face amount, I've got $8,000 waiting for me there if I need it. And one of the things this product does is offers that flexibility, and you can even switch it around a little bit as the years go on if you're in a true chronic illness situation. But basically you could have a full 8,000, but if you start out and you maybe have your kids helping out a little bit, you just want to help supplement their income, but you don't need the full amount, remember, this thing just works totally like a scale. If I only take $4,000 out per month, guess what? Instead of a 25-month plan, now it's going to last for up to 50 months if I only stuck at the $4,000 per month. And I'm not really losing it. Remember, like long-term care, you'd always say, take every bit of benefit you can get out of that plan because you paid the premiums, you want to get it all. Well, with this product, remember, we've got that good old life death benefit sitting out there. So whatever you don't use, you don't lose it. It's always going to be there for you as a death benefit, whatever amount you don't use with the chronic illness.
And the built-in return of premium has been illustrated. There's three options: 50% at 15, 75 at 20, and 100% at 25. Now, something that we haven't talked about, which is a little different than what we've been used to in the past, and that is this is only online. The application is you got to go online to their website and access the application and do it online. But let me tell you right now that is not a negative. We've been on it, and I am one to say that the IT world is not my friend, okay? I know how to use it, but it's not something that I have been a big advocate over the years with. I started in this business in the early 80s, and I used a yellow scratch pad, and that's how I got in selling insurance, and I have had a tough time progressing in the IT world. Let's just say that. But the nice thing is simply that I've been on there. I've done the app, and it is very simple. I will tell you that when you go on there, you get the application. It's like any other applications. You go and answer the questions. If you miss anything, there's up on the left-hand side a menu, and it'll be red. If you have missed something, it'll be green if you completed it all. It's really, really simple. And our underwriting, preferred, standard, 7 tables. We're getting some feedback. I don't know why, but we are getting some feedback. So if we could hold conversations down a little bit. The preferred, standard, and then they go up to table rated H on the underwriting. Now, at the beginning of this presentation, I said that the underwriting is no easier than regular long-term care, and I really want you guys to understand that. It really isn't any easier, but with 7 rating tables that they can go up to, there may be a possibility out there that they'll look at something and rate up for it and be able to get coverage for this product. So keep that in mind. They've got a dedicated underwriter. His name is Chris Zervlu at Minnesota Life for this product that he is at. You will have access to it, or we will be able to find out and see if you can get something issued. I just don't want to set you out there thinking that, oh gosh, they've got all these rate categories that they're going to issue all these things. I don't want you to do that. I don't want to start you off on the wrong foot. But there may be possibilities that we can get something that we weren't able to get in the long-term care world. It's worth asking the question or running it by the underwriter. Keep that in mind. Now, this is a screenshot of some of the materials that Minnesota Life has developed for this. And I'm telling you, we've got them in our offices, and we can shoot them out to you. They're very professionally done, really nice brochures and tools for you to use in the field. On the right hand of your screen, you will see these menus on your webinar that you can see that we've attached the PDFs of these for you. If you look for the little column that says handouts, if you click on it, it'll expand, and there's 3 PDFs there that you guys can click on and grab right now if you'd like to on this presentation. So those handouts are there, or you can call our offices and get those handouts, and we can send handouts to you. Tom, would you like to talk about the sales incentive?
You bet. I like the fun stuff, Dave. Thanks. Tell you what, not only do you have great materials, and Dave's going to get in a little bit about how to get started and talk about the website, et cetera, and it's not going to be a full-blown training, but just to show you guys where to go. But this is really nice. One of the things we loved about Minnesota Life was this incentive, really much higher than what I've ever seen with them. It's a really strong incentive for you guys to say, wow, I'm going to go and take the time to embrace this product. Not only is it super simple so you can get your hands around it right away, but look at those incentives up there. $300 Visa gift card for literally 2 issued apps, and $500 for 3. So you see how strong that is. When you look at it, $500 right off the bat for your first 3 apps is hard to beat when it comes to any type of sales incentive like this, and that's through the end of the year. So jump on board, and again, I think at the end we'll probably talk about the fact that the next step's up to you guys. Make sure you jump into this. I know how it is. I've been in this market forever. I know how it's easy to say, boy, that's pretty interesting. I'll get around to that one of these days. This thing, because of the way it's set up, especially us in the long-term care trenches, this product fits so perfectly as something in your portfolio. It's almost a no-brainer, because I think you will find that even though we love long-term care to death, we know there's no longer one product for every single person out there. So we think it's a great idea, and we think that this sales incentive hopefully will nudge you along to get you guys rolling even quicker. Dave,
so how do you So how do you get started? Well, right there on your screen, you'll see lifecenter.minnesota.com. So www.lifecenter.minnesotalife.com. You type that in, hit enter, then you're going to come up and you're going to see this screen. And the nice thing is you don't even have to be appointed to get here and to get on. Okay, they've set it up where they'll allow you on to their website to get quoting and to even see the e-app process and get on that and use it a little bit. You just won't be able to submit. Okay, so that's really easy. And when the screen pops up, you will see that, as I can show you right now, there's a red arrow here. That's where you would register at. You would get started. You don't have to have any number. You type in there. Once you get registered, then it takes you to a dedicated page that you'll look for under CareShield. You would hit the CareShield, and they've done up a dedicated page for CareShield product. Now, once you get to the dedicated CareShield product, you will see a little information on the product in an outline there. with state approval map, which we didn't mention on this. It's approved in all states except for Florida, New York, and California. We will tell you that I've heard rumors that Florida is getting very, very close to getting approved. New York, unfortunately, is going to be a while down the road. California is in there, and it is a life product, not an LTC product. They're telling us that they do get their life products approved in California a lot quicker than long-term care. So we're hoping to see that fall down hopefully by the very first quarter of this year, maybe even before the end of the year, but we're hoping for first quarter. We know what California is like to get products approved in. It is a difficult state, but it is a life chassis, not the long-term care chassis. Once you go in there, and remember, this is an EAP deal, so whether you're residing in California, you can sell this anywhere. So as long as you're appointed in other states, you can sell this product anywhere. To get a quote, on the bottom here, you've got request a quote. All you do is click on that, and then you go to the quote page, and all you need to do is put in, you don't even have to put in a name, but they ask you for a name. You put in the age or put in the date of birth, you put in the death benefit, and it creates a quote. That's as difficult as it gets. It's so simple. And you can do several quotes, and then you hit the quote button, and it runs a quote for you. Then you want to print it or you want to email it, then you would hit run quote. It's very simple. To get to the EAP, you go to just across from it, and it says apply for coverage. That'll open up the EAP process. You'll go in there, and again, it's a very simple process, and we can set up a separate webinar to go through this and make you feel comfortable. If you would like to, just let us know, and we can do it in individual agencies or even an individual if they want to take the time to go through it and get a little more comfortable. But you can go in today and play with it. You just can't hit the submit until you are appointed with it. So,
hey, Dave.
Yes, go ahead.
Sorry to jump in. I know we're going along on time. If you go back one screen, this is actually a screenshot that Dave has on there of that website. But I do want to make sure you guys know, not only can you download those things right here on this webinar today, but they do have all their advisor materials right there on the bottom. See those bottom tabs? And they actually do have training. I think we'll hopefully set one up where we can do it from Golden Care and AIM side and really give you guys some good training on the EAP using some of our expertise and knowledge of your guys' background. But they do have training already on there that shows you how to go through the EAP and some of those other things. So if you want to jump on this sooner rather than later, more power to you. Jump on there and take advantage of the resources that Minnesota Life has. Go ahead, Dave.
Absolutely. Thanks, Tom. That's very important. Just get used to that site, and as Tom said earlier, they have other products like that, Eclipse Protector. In fact, I know some of you probably have had some dealings with Minnesota Life in the past, so that is on there, and it just gets you comfortable with it. Now, a very important point is that Minnesota Life is in the middle of developing a consumer presentation. I think this is very important since they've got an EAP process that you can do join me screens and go and show a presentation and then jump into the app process. This will help you facilitate this process of using the EAP process and doing a presentation, whether you're sitting in California and you're doing a sale in Minnesota, or you're sitting in Florida and you're doing a sale in Washington. It holds out and allows you to sell anywhere and work anywhere out there, and it gives you a presentation. That consumer presentation is not out of compliance yet, but we expect it to be out in probably the next 30 days, if not sooner. So the consumer presentation should be there anytime.
Hey, Dave, Mike Lynch here.
Yeah.
I got an update I want to just share on two things. This past Monday, the state of Florida was approved for CareShield, and just yesterday we received the approved consumer PowerPoint. So both of those things are ready.
Oh, good, great. I wasn't aware of that, so great. Florida's online now, and that consumer presentation, we'll have those out to you. Just request it, and we'll make sure you have a copy of it. So with this whole scenario of this program, I think that you guys can see this product, how simple it is, and I think there's really two big key components, is the simplicity of the product and the guarantees that's throughout this product. It makes the difference on what we have used in the past and where we're going today. If you can sit down with a client and give them all these guarantees and get them to be able to understand what you're talking about, which this product does, it makes it very simple. 5 key points with 20 visuals on that presentation. It will be a very easy process for you to get across what this is and how easy it is to work with. The chronic illness, as we talked about before, the different options. This is where I was talking about where we see most of those sales and how it sets up. If you did $4,000, it's 4% times 25 months. The total benefit would be $100,000 in benefits. Just such an easy little illustration on how this plan works on the CareShield product. Again, I want to emphasize, regardless of whether or not you need care, I think that this is where I've talked to a lot of producers, is that cash is, we've heard this before, is king. They can do whatever they want to do with the money once they qualify for benefits. So just think of the things that you can illustrate to a customer on how they can use the benefits on this. A living benefit that will allow them to do what they want with that money, and that's giving you some ideas on the screen here, is home modification, grocery, prescriptions, transportation, all things. It really opens up the world to different things. And I think this is a point that we have sold with the mutual product for years, is we don't know what's going to come down the road in the future for types of cares. What does it matter when you've got a cash benefit? Because you can use that money for whatever health delivery system we may roll into in the future. I think that that is really a big part of a sale point for you guys out there when you're talking and sitting down with them. I come from the early years of long-term care, and you know, in the early years it was skilled 3-day hospital stays, and then they came in with adding home health care, then they came in with assisted living. We don't know in the future what may lay out there for a health delivery system. It won't matter with cash because they can use it for whatever they want to. It really does give you a peace of mind and your client a peace of mind that their policy will stay current with them. The lump sum payment for the terminal illness that you can have, the tax-free payment that you will get at death, the client will get for their heirs and that. This product just continues on with good things to talk about and ways to use this policy, and helps to protect the family's financial future. They can use this money for in things that you know that they wouldn't have with just a long-term care policy. It's a whole list of things there. Terminal illness, as I was saying, and that Tom had hit on really strongly about, is that it'll be a lump sum. It'll be all of the benefit except for $10,000 holdback, which will be a death benefit at the end of the period, which the uses of that type of thing allows them to use that money if they get diagnosed with a terminal illness that can help out the family quite a bit. Premium rate guarantees for life, and we wanted to finish up with this part of it is you know, one of the reasons that the linked products that we have marketed on there is it limits the market on who's got that money to transfer from one product to the other. We think that this is a very important fact of the policy, that you can sell annual, semi-annual, quarterly, or monthly premiums on this product, a continuous pay. And when it comes to this product, that's a little bit different on this, is that what the world we have lived in for years and years is that long-term care, you can build up a nice residual income. Well, with this product, you can do the same thing, because this has renewal income on it for you as an agent. So you can sell this product, do annual payments, semi-annuals, quarterlies, and there's a renewal income on this thing that you can go when you decide to stop working or things slow down. You can go out to your mailbox, or all of a sudden in your checking account there's money deposited in there because you built up this nice renewal income stream with this product. We think that that's very important. We've always known that annuity market and the single premium markets, you stop that day, you're done. The income stops too. We want to get you a product that you can sell on a daily basis and build up a nice income stream with a product like this. I think that that is a very important part of the making a decision on the products that you use. I'd like to open it up now to questions from everybody else. But before I do that, Tom, do you have any final points? Or even Mike, do you have something that you want to share?
You know, basically, again, I know we held you guys for a while, and I want to open it up and make sure we get to the questions. But I really quick want to tell you, obviously, thanks for those of you who are going to jump off before we get all the way through. You guys know how to get a hold of us at AIM and Golden Care. Make sure you do if you need any help, and you have any questions, specific underwriting stuff, etc. And we'll make sure we try to cover that for you. And otherwise, Mike, I don't know if you had anything else, but go ahead if you do, or we'll open her up.
Well, just one more point, follow up on everything that everybody said. Yeah, just that the product is positioned to be something to catch the ones that are getting away from me. I don't look at it as a replacement for traditional long-term care insurance in any way. That still has its place, but there are those people out there, like they pointed out, that they get away from you because they don't like some of the uncertainties of the traditional product. So this will fit that niche. And if there's any takeaway to this thing, it's simple, it's all cash, and it's all guaranteed. And those are the points that are strongest about the product. So otherwise, we'll open it up to the questions.
Yeah, and just know that as we've opened up a lot of them, if you guys want to ask questions, go right ahead.
I'll ask a question. This is Bob Stark.
Yeah.
Hey, great.
I like if they're in the system as
Diane, can hear your conversation.
There we go. Thanks. Hey, Bob Stark. Hey, great product. Simple and easy, you know, and guarantees. Those are words that clients definitely like. Do you guys have an underwriting guideline for that somewhere?
We do, Bob, and we'll make sure that we send one over to you right away. Okay. And anyone that else wants one, please request one from us, and we'll shoot an underwriting guide to you.
Yeah, it's one of the links on the on the website there. You can download the product guide.
Good, thanks, Mike. And we'd love to grab you guys for a call, you know, not this Friday, but next Friday if you want to do a call with us. I'll just reach out to me, John.
Okay. Any other questions out there?
Do we have to go to Minnesota Life by themselves, or if we're appointed with Golden Care, that's okay?
Well, if you're appointed with Golden Care, that doesn't automatically get you with Minnesota Life, so yes, you have to get appointed with Minnesota Life.
Okay, that's what I wanted to know. Thank you.
Any other questions?
Hi, Dave. This is Louis Werbolowski. It was a great presentation. Thank you. If we have a young couple or a young person that might be in their late 40s, early 50s who gets something to start, and then 10 years later or 12 years later, when they start getting more money from Social Security or otherwise, and they want to add to this, that would then be based on their age and their health issues at that time to reapply for an additional policy that might be twice as much or 3 times as much or whatever. Is that possible?
Yeah, it is absolutely. They can have another policy. So the nice thing is you outlined it very well, Louis, is it'd be just like taking out a new policy. They'll be at new age, and they'll have to go through the underwriting process again, and they'd have a separate policy. But they can stack on as long as they don't go over the limits.
Limit of how much?
No, 500,000.
Okay. Cool. Thanks.
You bet. There were a couple.
Do 500,000 at one time?
Sure, they could. It'll be a big premium, but they certainly could.
Once you're familiar with the company, there's other products that go up to $1 million and $1 million plus where you can add a chronic illness rider to those policies. So there are other options if you get beyond that point.
Very good point, Mike. Thank you. There's a couple of you out there that I wasn't able, so you must have not put in your PIN number for audio into it. Was not able to. So if you're trying to ask a question, I'm sorry, but I've tried to unmute your phone a couple of times. But is there any more questions that we have?
There's nothing like this available in New York State, correct?
Yeah, unfortunately not. And you know, New York, as I'm sure you know, is difficult to get the products in, and because you got to have a brick and mortar. There's one of the issues, but there's a few other issues there too. I don't expect it to happen anytime real soon. Probably sometime next year, but nothing real soon on that.
Okay, thank you.
All right. Any other questions?
Where do we request that underwriting thing? You said to contact you. Do we have your email addresses?
Well, certainly. My email address, and Tom, I'll let you give yours or someone at Golden Care's email address is david.wayne, and Wayne is spelled a little different, W-A-N-E, no Y in it, at yaim.com. So david.wayne at the word Y, WHYAIM.com. Tom?
Yep. Mine is Tom R, T-O-M-R, at Golden Care USA. Don't forget the USA, goldencareusa.com. And if you get that to us, we'll make sure we get the information out to you as well.
And don't even worry. Go ahead, Mike.
I was just going to add to that. Just remember now, the best way to get your materials is just to get familiar with going out and registering on that website. But that has to be done anyway if you're going to have any way of accessing this product. So once you're registered and you get out to the page, the CareShield page, the whole page is dedicated to that product. And at the bottom, there's several links there on all the materials, including the underwriting guide. You could have that guide downloaded to a PDF. As soon as you get off the phone, you'd have it that quick. It's right there. You got to register. You need a log on. You need an ID. Once you do that, bingo, you're in there.
Yep. It's an easy process.
I should add on that. Go ahead. You're going to say the same thing I was, Dave. That it takes 2 minutes to get registered, or a minute.
Yeah.
You know.
Makes sense. Thank you.
Any other questions?
Yes. Is this this is a life insurance product with a chronic care rider or a long-term care rider? And if it's just the same, is it the same, or is it something different between the two?
Great question. It is a chronic rider, but since the chronic rider has been changed, where it doesn't require permanent, it is now it is a chronic rider, but works just like an LTC rider. It's the 206 ADLs, the cognitive, and the 90-day. So it just plays just like a regular long-term care. In the old days, they used to have a permanent, you had to be permanently disabled or permanently ill, and it paid differently because of that. So that has gone away, and it's just like an LTC rider, but it is listed as a chronic rider.
But is it okay conversationally to say that this is a long-term care rider?
The way I would word it is that it pays for long-term care benefits. It can pay for long-term care benefits. I wouldn't call it a long-term care rider, but I would just say it pays for long-term care benefits.
And there's no definitional, there's no difference between what chronic care is and long-term care is in this matter, then?
That's correct.
No.
Thank you.
Is this a new product? I mean, I just wasn't sure about that.
Yes, it is. Go ahead, Mike.
No, I'm sorry. It's it came out the last or middle part of September they released it. So that's the first it's been out. So it is a brand new product for all practical purposes. And as far as just the states again, California's been filed. It'll take a while, whatever it takes, it'll get done, and that's the only state filed that's left. And then with New York, they're expecting to file it early in 2017. So.
Great, thank you. It's a good product. I like it.
Yeah, it really is simple and guarantees. Any other questions?
Does anybody else have anything like this? Prudential has something that sounded similar, but are you aware of who the direct competitors for this would be?
Well, what we have seen out there, that we haven't seen anything that is just like this. There are versions, offsets of this that are different and sit in a different role. We really truly believe this sits out there by itself. Now, with that being said, I don't think it'll be long before other carriers will see this and say, wow, they've got something here, and there will be other versions of this. But this is, like Mike said, this has only been out since September, and it's taken a different approach than the traditional Link products.
You know, why it is unique is all the pieces have come together that we as long-term care insurance people have been looking for. First of all, it's an annual pay. It pays first-year end renewal commissions. It is based on a life chassis, but now it has the chronic illness rider, which is just virtually identical to a long-term care rider. So therefore, everything is exactly the same, and it can be used for the same purpose, and it's packaged up, and it looks like a solution for a long-term care insurance need. And that's what's different. The other ones that have been out there, and there's several other competitor products, they're just sort of slapped together like they're a life product. They're not really put together and designed and focused on us. We're the long-term care insurance people, and all the products that were developed out there were sort of slapped together for the life side. That it becomes, you know, an add-on to a life presentation. This is really designed for the purpose for which we've been selling our product for years and years and years. That's what's different about it.
Great questions, everybody. Do we have any more? Oh, that was a loud one. Well, I think that's probably it.